Hey everyone, welcome back to the Mark Loeffler Experience. Today we're talking about mortgages. All through last year, around this time, we were talking about that mortgage deferral cliff. This was going to bring down the Canadian housing market. I want you to comment down below, did that happen? In your opinion, did the mortgage deferral cliff do anything at all? I don't know, we're going to link the videos that we did on that. I think there was like 2 or 3 that we did last year. Let's see who was right. Were the experts right? Was some jerk on YouTube right? I don't know. We're just going to let you go ahead and have that preview. But anyways, so let's talk about where we are with mortgages today, because we're getting to the point where we are borrowing more and more money than we ever have. We are not quite there yet. We are not at our pre-pandemic debt levels, debt to income ratio. We are not there yet. Guys, we have to try harder. We have to get more mortgages. We have to load on that debt. We are not there. Either that or we're just making a heck of a lot more money. Actually, there's a couple factors in play here. We're going to talk about that during this whole thing. We get these nice sheets here from our CMHC. CMHC does do a lot of good things where obviously they do, all of this research and they pay people lots of money to do this. We do appreciate that. Thank you, CMHC. Lo and behold, that banks and credit unions are making up 93% of the whole mortgage market. As you can see, delinquency rates are down. So these are people who are more than 90 days in arrears on their mortgage, which makes sense. Because if you're 90 days in arrears and you can't pay your mortgage, what would you do in today's market? You would list it for some ridiculously low price. In 1 week, you would get 20 offers and you would just sell your property. That's what I would do if I was in that situation. So like 0.20 is the delinquency rate on bank mortgages. 0.13 is on credit union mortgages. And this does not obviously include CMHC or not insured or non-insured, I should say. This is just all mortgages in general. And you can see the average mortgage from a bank is $260,000. So really small compared to average house prices in Canada. Average on credit unions is smaller. Mortgage financial corporations, insurance trust companies is $300,000. And then mortgage investment entities like a MIC or private mortgages or something like that is $260,000. But their delinquency rates are obviously higher. But they are under 1% still. And obviously they're the riskiest mortgages. Just a couple key variables up here. These are 2020 stats. Housing starts were only up 4.4%. MLS sales were up 12.6%. So again, I don't know. I'm just not going to read that. I'm not going to read into that for you. I'm just going to let that sit out there, and you tell me what you believe. Comment down below. First half of 2021, mortgage debt growth ticked up to levels not seen in a decade. Well, I mean, let's see what happened in the first half of this year. Is we had the lowest interest rates we've ever seen, and people spent more money on housing up until now, because we had that little dip through the summer, and we are seeing it come back up a bit more right now. The other thing that I thought was really, really interesting is that uninsured mortgages, so people not taking CMHC, 40% of the people are taking variable rate right now. I'm hoping it's because everyone has watched that variable rate video that we're going to link right here. I doubt it, because I think we're only at like 800 or something views on that one. A lot of people are taking it now because of the difference in, I can go get a variable rate mortgage right now at 1 to 1.2%, and a fixed rate mortgage is going to be 2-ish, right? So it's a big difference. The other thing I thought was really, really interesting. First off, I'm going to just put it out there. Who knew the government regulations would have unintended consequences? Put up your hand if you did. Yep. Smash that like button if you do that too. Yeah, uninsured mortgage market went up 20%. The insured mortgage market is actually decreasing. So the number of people taking out CMHC or Genworth mortgages are decreasing. Typically, you would use those mortgages because you can get a better fixed rate product or variable rate product if it's insured, because again, the bank has no risk with an insured product. Like, that's the whole point. They come in, insure that. If the bank tries to sell it at first to be made whole, if they can't be made whole, they just go take it to CMHC or Genworth or whoever, Canada Guarantee, and they go ahead and sell that property for as much as they can get. They give the bank all the money that they would have loaned, and the bank is super happy because they can loan out money risk-free. But that's going down. And why is that? Well, the government, in all their wisdom, has capped insured mortgages at $1 million, which is good or bad. I'm not going to say anything about that. I'm just saying that's what they've done. So, and what has happened in the last 2 years? Well, prices have gone up significantly. Prices go up significantly. The number of people who would have taken larger insured mortgages are down, obviously, because they can't. So therefore, now insured mortgage companies take less and less of the volume. We'll get into that down here at the bottom, but I just thought that was super interesting that when I actually went through that. Basically, out of all the deferrals last year, very, very few, most people just went ahead and started making their payments again. I would guess very few who couldn't sold into that booming market and went ahead and did something else, moved to a different area. I heard of one person, they sold in one area, they got a job in another area, they went and moved there, and got a new mortgage, obviously, and went ahead and bought that. The mortgage deferral cliff never happened. I'm sure you guys all knew that from the beginning of the video, and you know that now, and you all commented down below that the mortgage deferral cliff didn't happen. And you guys can go back and watch those videos I did last year and talk about why, obviously, we didn't think that was going to happen, or that there would be a lot of inventory hit the market, which would cause, obviously, the prices to go down. Where are mortgage rates going? Obviously, our economy is strengthening. What's this new virus, Optimus Prime or whatever it is? I don't know. Doesn't matter. But if that lets Bank of Canada hold their mortgage rates or their overnight lending rate down to a quarter point for longer, I mean, that's not bad for me. I'm just going to put that out there. So if Bank of Canada, if you're listening, hold it for a year or so more. Anyways, and obviously fixed mortgage rates are starting to go up in price. That's why we're seeing more people go to variable. This is usually a trend into the end of the year to the beginning of the new year. And then typically in February, March, fixed rate products come down again because, I'm just going to put it out there again, the banks, they are sales companies. They are selling you product. And if more people want product at that time, well, that's when they're going to put their sales on. It's like Black Friday for the banks in the spring. More people buy and sell, therefore more people get mortgages, therefore they need to be more competitive. Just how it works. New mortgage holders are opting for longer term mortgages to take advantage of historically low interest rates. Smart. Obviously, we can see that mortgage debt growth accelerated sharply in 2021. Well, probably could have told you that. As of June, there was 1.73 trillion, representing a 9.3% increase. Now, the only other time we saw that was in like 2007. Well, we saw it in 2006 and then 2008 after that. I don't know if you guys remember what happened in 2008, 2009. Kind of had a little bit of a crisis in the U.S., and then most people in Canada woke up after 6 months and said, hey, crap, I still have a job. Oh, I can still go ahead and get a mortgage. Oh, this sounds good. And they all went and bought more houses. Obviously, people de-levered for a while. We levered up back up. Obviously, as the pandemic was happening, we de-levered a lot. Nobody did anything for a while. And now we're starting to kick that up a notch again. And why? Well, let's be honest. If you can get a 1% mortgage and, they're telling us that inflation's 4%, they're literally giving you free money. It's not costing you anything to borrow that money. And you have to pay back less in tomorrow's money than you do today. I would do the math, but that would be super esoteric and there'd be like 20 people watch that video. I might just do it for my own fun because I'm a geek like that. I might throw it up on my Instagram. So if you guys aren't following me on Instagram, you should be. Living the Dream 40, check it out. We talked about that. Variable rates, a larger share of the mortgages. What happened in late 2019 was the spreads went down very small because, again, when the banks think things are going to be good, the spread is big. When they don't know what the heck's going to happen, the spread is small. That's just how it works. So you're not going to go into a variable rate product at prime or prime minus a quarter. You know, when it's prime minus like 1, prime minus 1.5, like that's big money. Everybody says, well, people are so much in debt. And here's just the fact of the matter here is that the debt service as a share of disposable income is below pre-pandemic levels. So we're not even what we were back before all this mess started. Like we're still below, as you know, your mortgage payments are still lower as a percentage of your income. I mean, that has obviously to do with a couple things. Inflation, wages are going up, interest rates are super low. People are taking those variable rate mortgages. And as we've said, I don't know, thousands of times on here, people don't care what they pay for a house. They care how much they pay monthly. Uninsured mortgage product, you can see the spike is in purchases. Well, most people are buying expensive homes because homes are expensive. So therefore, they're taking uninsured product because they're not eligible to take insured product. If the government or OFSI or whoever makes those decisions went ahead and said, you know what, we're going to change that. What basically was happening was banks were self-insuring that product to offer you the lowest rate and to have no risk on the books. So here you can see, here's a good graph of how many millions. So 500-ish, but you can see insured product is going down and uninsured product is going up. And I'm pretty sure like right around that point is when, or somewhere back here, I forget when they made that change. And basically it didn't really matter except in markets like Vancouver and Toronto at that time. And now it's affecting more and more of the market. I mean, when a fourplex in Hamilton goes for over $1 million, just putting that out there. Obviously, we know uninsured residential mortgages tend to be larger than insured. Well, of course, we went through that. As you can see here, that mortgage arrears continue to decline. They were highest in the second quarter of 2020, almost across the board, and they've continued to come down, with the lowest being credit unions. I'm just going to put this out there again. The credit unions are not governed by OFSI. So they don't have to follow the rules, so therefore they can loan different amounts and they can do whatever they want. Not whatever they want, they're governed by their market. Yet they're not regulated by the same people as the big banks. So therefore, I mean, I'm just going to bring it out there. Do you think if the banks could control their own destiny, we'd have a lower rate? I don't know. Yeah. All right, everyone. So if you guys want to go play with all this stuff, I'm going to link this CMHC mortgage industry report. You can go ahead and look at that. They have, like I just have here up on the screen, they got the mortgage dashboard. And now, by the way, I'm not a mortgage agent. I'm not anything other than I'm a real estate agent, real estate investor, options trader, and just trying to help you guys understand this market to make a good decision whether we should be buying real estate right now because it's going to go up in value and we can get some rental profits, or if we should be selling right now because whole market's going to crash. Anyways, thanks everybody. We'll catch you next time. Have a great one.